Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, March 14th, 2011. It's 11:30 a.m. Eastern Daylight Savings Time. In the United States, it's 3:30 p.m. in London. They haven't switched over yet. 9:30 a.m. in Mexico City. They haven't switched over. Bermuda has switched over. It's 12:30 p.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. Well, we'll go right to the first story. Of course, it's the fallout from the Japanese earthquake and tsunami. We pulled this picture up today from the U.S. Geological Survey site. This is the Pacific Ocean off the coast of Sendai, about 120 miles northeast of Tokyo. And you can see that this is the quake activity for the past 4 days. On the lower right, above the sea in seismic activity, is a 4.9 quake that came in about an hour ago. The blues are 3 hours old, and the yellows are 4 days old or less. So there has been a tremendous amount of activity in that area. Some of the Japanese news service organizations are predicting another aftershock as high as 7.0 or greater. They're still facing massive difficulties with the nuclear power plants. They've now had the second hydrogen explosion in 3 days at the Fujimita plant. Here's a picture of it. It sent a massive cloud of smoke into the air. The blast was felt 25 miles away. The authorities are still saying that radiation levels at the unit are within legal limits. Later today, fuel rods at a separate reactor at the same plant were fully exposed after it lost its ability to cool down. Here is the Fukushima plant. You see it is right on the ocean. It was hit pretty severely by the tsunami. The blast this morning came after a system failure after Friday's massive quake and tsunami. The two disasters are now estimated to have left about 10,000 people dead. The inner containment shell in a third reactor is still intact. However, according to the Washington Post, there are fears right now that they may have an explosion at that one. They've been very lucky so far. Nuclear experts are saying that the possibility of a Chernobyl-like event is virtually impossible, because at that plant in the Ukraine in 1986, there apparently was no containment shell built around the reactor, unlike here. The company, Japanese Tokyo Electric, have evacuated 180,000 people already from the area. Exposures so far seem to be limited to about 160 people. Of course, this is having ramifications in the insurance industry. Damage from the 9.0 quake is now so severe that the event is likely to become the second costliest natural disaster on record for the global insurance and reinsurance community. The market is now considering delaying the April 1 Japanese renewals. AIR worldwide has estimated an industry loss of between $15 billion and $35 billion, but stressed that this was preliminary and did not include any indications regarding the tsunami. AIR said that that would be calculated separately, as that particular peril is not included within its Japanese earthquake model. AIR did not give any indication of the expected cost of the tsunami, but did say that the tsunami remains the main story of this event, as it will be responsible for most of the fatalities. According to an analyst at Keefe, Bruyette & Woods, Munich Re revealed that there was already talk of delaying Japan's April 1 renewals by a month. This was when the reinsurer hosted its analyst meeting on Friday before news of the earthquake. The analyst said that market capitalization fell by about 900 million euros on Friday, and this was an indication of the likely loss that Munich Re, the world's largest reinsurer, could suffer. The Insurance Information Institute said that the massive earthquake and tsunami that hit Japan could be one of the costliest earthquakes in Japanese history, if not the world. According to Bob Hartwig, president of the III, losses from the earthquake are going to be measured in the many billions of dollars. The question is, where will those losses fall? Unlike the insurance markets of Chile and New Zealand, which rely heavily on global reinsurers, the Japanese domestic insurance and reinsurance markets are robust and will carry the brunt of the losses. Hartwig noted that with $107 billion in premiums written in 2009, the Japanese non-life insurance market is second only to that of the U.S. and Germany. Hartwig noted that the impact on Japanese insurers will be on the large Japanese domestic carriers such as Tokyo Marine and Nichido Fire, Mitsui Sumitomo, Sompo Japan, Nippon Koa Assurance, and IOI. Including the March 11 quake, 4 of the 5 costliest earthquakes and tsunamis in the past 30 years have now happened in the last 13 months. Paul Newer at Holborn Re has got some thoughts on this. He said that even before the 9.0 earthquake on Friday, many reinsurers have already reached their budgeted cat losses for 2011. Newer said what we have in the first quarter is $5 to $10 billion in reinsurance losses. It's a year's worth of loss crammed into 8 weeks of the year. He said in addition to catastrophes in the first quarter, he expects the quarter will show loss development on the September New Zealand quake and the Australian floods from the last week of last year, which probably weren't booked in 2010. There are also reports he's hearing of continuing development on the Chilean quake. So with up to the $10 billion of large losses booked in the first quarter, this is exclusive of the Japanese quake, many reinsurers will see an extra 20 to 25 points in their loss ratios. So boom, imagine what's going to happen when this comes in. QBE says that they expect losses of around $125 million in its European operations from the March 11th earthquake and tsunami. They are by far the first carrier out with any estimate. QBE says that the losses would be borne by QBE's European reinsurance, marine, and energy operations, where its exposures are relatively low. Meanwhile, another QBE executive speaking on Friday before news of the earthquake said that it will take up to 18 months before many classes of business recover from the soft market, barring something truly catastrophic happening. This is according to the head of QBE's, let me make sure I get his exact title proper, the head of QBE's European operations. He said that Friday's Japanese, or he did speak after the earthquake, that's what I was confused about. He said that the Japanese earthquake on Friday is unlikely to prove to be a sufficient enough insured loss for the total industry cycle. This is according to the global securities and investment banking group Jefferies International. They're predicting a $10 billion industry loss from the earthquake. Jefferies analyst James Shuck said, at this stage, insured losses from the Japanese earthquake appear limited. We're working on the assumption of a $10 billion loss. The impact on insurer and reinsurance balance sheets is likely to be around 5%. Well, clearly they were off. The QBE European Operations CEO, Steve Burns, said that he believed many markets have not yet experienced enough pain to provoke a rethink on softening rates. He said, I think until there is more pain, either via the poorer part of the market beginning to turn into a serious loss, nothing will alter the present situation. Now, he did speak before the Japanese quake occurred. Now, there's another shoe here that dropped, cat bonds. Uncorrelated investment losses, well, 8 cat bond transactions totaling over $1 billion may have triggered, and they could leave financial investors exposed to insured losses after the earthquake. Cat bonds transfer the risk of natural disasters to investors who receive a yield in return for agreeing to cover claims when an event occurs. The 9.0 quake will cause significant losses for the sponsors, including Flagstone Re and Platinum, as well as Munich Re, SCOR, and Swiss Re. But cat bond investors are waiting for updates from those sponsors and the modeling companies before they know if any of those bonds will have been triggered. The bonds are based on parametric triggers, which means that the cat bond may not be partially or fully triggered for covered disaster even when the sponsor of the bond has been hit by a big loss. Munich Re, for example, has 2 bonds exposed to pure Japanese earthquake risk. Munich Re placed a $250 million cat bond in October of 2007 for the East Japan Railway Company, and then it also arranged a $300 million Japanese quake transaction, Mutiki Re, for the sponsoring Japanese insurer Zankorin in May of 2008. One European-based broker said that the current feeling is that these bonds are unlikely to be triggered, but nobody can be sure. Stock market in New York is down about 113 points right now. We'll go to a word from our sponsors and come back with the rest of the news. In London, Chaucer's nuclear syndicate, numbered 1176, said this morning that it did not provide property or business interruption cover to the nuclear plant in Japan that's experiencing the troubles right now. Chaucer added that liability losses would be excluded. They confirmed their exposure to nuclear plants in Japan, but said its losses would be limited. In a statement, they said that its nuclear syndicate 1176 is one of a panel that provide coverage to Tokyo Electric Power Company. Tokyo Electric Power is the owner of 2 of the 3 nuclear sites in Fukushima and Daini, but that Tokyo Electric has no coverage in place with Chaucer for property damage or business interruption. A third plant, Onagawa, owned by Tohoku Electric Power Company, does have a cover for property damages, but its perils of earthquake and tsunami to cause property damage are specifically excluded. Under the Japanese Nuclear Act of 1961 and as amended in 2009, the operators are not liable for any damage arising from, quote, a grave natural disaster of an exceptional nature. This said Chaucer. This clearly would cover something like that. Japanese stocks have suffered their biggest slide since the 2008 financial crisis. Investors are looking at a further drop as uncertainty over the nuclear crisis compounds worries. The Nikkei's TOPIX index dropped 7.5% on record trading volume. Investors seem to be bailing out of big blue chip companies, which are indeed taking hits because of rolling electricity blackouts. The market capitalization of shares on the Tokyo Stock Exchange fell by about $286 billion, greater than the size of Finland's economy. And Toyota Motor Corporation, the world's largest car maker, may lose output of at least 40,000 vehicles after the quake-damaged factories in the nuclear power plants that are crippled are causing electricity shortages. Tokyo closed 12 plants in Japan through the 16th of March. The manufacturer's profit will be cut by about $72 million for each day of lost operations. Nissan and Honda are going to lose about $24 million a day. Sony and Toshiba shut plants following the earthquake. The disaster overall may trim 0.3%. Actually, it's 0.3. All right, so that's 3%. That's 3% from Japan's economy as power outages continue to cut industrial production. Nissan suspended operations at 4 plants and 2 other plants until the 18th. Nissan said that 2,300 new cars that were bound for the U.S. were destroyed by the tsunami. Honda has cut production through March 20th by about an estimated 17,000 cars. And in the United States, about 6,000 miles away, damages in California and Hawaii from the tsunami could reach $100 million. In California, the heaviest damage were seen in ports in the northern half of the state. The largest tsunami wave to hit the state was a little over 8 feet, was recorded in Crescent City. It sank at least 8 fishing vessels. Most of the port's fleet had heeded warnings and had left for sea. The port at Crescent City was completely destroyed as a result of tsunamis in 1964 and 2006. And the port of Santa Cruz, a little bit to the south, 17 boats were sunk. Damages there were estimated at $17 million. In Los Angeles, no significant wave damage was reported as seas merely rose 4 feet higher than expected. Heavy waves in Hawaii did damage at least 60 homes and sank 15 boats and damaged hundreds of other vessels. Well, meanwhile, as all this is going on, Warren Buffett is puttering away. This morning it was announced that Berkshire Hathaway has agreed to buy Lubrizol Corporation, the world's largest producer of lubricant additives, for about $9 billion. It's Berkshire Hathaway's second biggest acquisition in the past 5 years. Berkshire will pay a 28% premium over Lubrizol's closing price on Friday. The purchase includes assuming an additional $700 million of debt. It's the second biggest buy for Buffett after his Burlington Northern Santa Fe Railroad buy. Buffett said in a statement, "Lubrizol is exactly the sort of company with which we love to partner. The global leader in several market applications run by a talented CEO, James Hambrick. The purchase will generate profits for Berkshire for decades," said one analyst, although returns will be limited because Lubrizol shares have already more than quadrupled from their 2009 lows. He said, "It's going to be around forever because you need this stuff to run the world." Buffett's not stealing it. He's paying a fair price, but he's going to make a lot of money over it, a lot of money on it over the long run. Well, I'm glad somebody's doing well. Might as well be Buffett. That's all the news that we have for today. If we have any more news on this tragedy in Japan, we'll come back and tell you, but the news seems to be all bad. I'm sure more individual insurers and reinsurers will come out with their loss estimates during today, and we'll report them to you tomorrow. Thank you for watching, and we'll see you tomorrow.